Hey guys, welcome back to the channel. Today, something big is happening right now, and most people aren't paying attention. Global tensions are rising, oil supply is under threat, and the financial system could feel the impact sooner than you think. In this video, we're breaking down what's happening today and why it matters for your money, your investments, and your future. Stay tuned. Right now, the most important story in the world is unfolding in the Middle East. Tensions involving Iran, the United States, and regional players are escalating, particularly around the Straits of Hormuz, one of the most critical oil shipping routes on Earth. A significant portion of the world's oil flow through this narrow passage. If that supply is disrupted, oil prices could spike dramatically, and when oil spikes, everything else follows. Gas prices go up, shipping costs increase, inflation rises again. This is how global economic shocks begin. We're already in a fragile economic environment. Interest rates are still elevated, debt levels, both government and consumers, are near record highs. To understand where things are going, you also have to look at policy decisions coming out of Washington. Right now, the administration is balancing multiple priorities at the same time. First, foreign policy. The U.S. continues to maintain a strong military presence in key regions, especially around critical trade routes like the Straits of Hormuz. The goal here is stability, keeping global shipping lanes open and preventing disruptions to energy supplies. Second is economic policy. The administration has supported higher interest rate policies indirectly by backing the Federal Reserve's efforts to control inflation. At the same time, government spending remains elevated, particularly in areas like infrastructure, defense, and domestic programs. This creates a unique situation, tighter monetary policy combined with continued fiscal spending. Another key focus is trade and energy dependence. The U.S. has been working to increase domestic energy production while also investing in renewable energy sources like solar and wind. This dual approach is designed to reduce reliance on unstable regions while preparing for long-term energy transition. At the same time, trade policy has shifted towards strengthening domestic industries, especially in areas like semiconductors, manufacturing, and technology. This includes incentives for companies to produce more within the United States rather than overseas. We are also seeing increased regulatory factors across multiple sectors. In finance, there is a greater scrutiny on banks, lending practices, and market stability, especially after recent stress in the financial system. In technology, there is growing attention on AI, data, and large tech companies. And in healthcare, policy decisions continue to impact reimbursement, coverage, and overall system cost. All of these regulatory shifts influence how capitals move and where opportunities emerge. When you put it all together, policy is shaping the environment in three major ways. One, maintaining global stability through military and diplomatic presence. Two, managing inflation while supporting economic growth. And three, redirecting investment toward domestic production and strategic industries. But here's the key point. Policy doesn't eliminate risk, it shifts it. And understanding where that risk is moving is where real opportunity comes from. Now add a potential energy shock on top of that, and you get volatility in the stock market, real estate, business lending. This is the kind of setup that can either create major losses or major opportunities. At the same time, countries around the world are accelerating plans to reduce dependence on unstable energy sources. We're seeing increased investment in solar, nuclear, and domestic energy production. But here's the reality. Oil is still the backbone of the global economy. So even as the world tries to transition, it remains highly vulnerable. Beyond energy, global security concerns are rising. Several countries are increasing military readiness. Terror threat levels in parts of Europe have been raised, and ongoing conflicts continue to create uncertainty. When global risks increase, markets tend to react quickly. At the same time, we're seeing a shift in how money is being stored and moved. Gold is gaining attention again as a safe haven asset. Crypto continues to attract institutional interest, and governments are exploring digital currencies. This is not random. This is a system adapting to instability. So what are experienced investors watching right now? Right now, they're watching oil prices, gold, commodities, energy infrastructure, defense sector. And they're paying very close attention to policy changes. Because in times like this, positioning matters more than ever. The bottom line is simple. The world is becoming more unstable. But with that instability comes opportunity. The people who understand what's happening early and the ones who benefit the most. If you want to stay ahead of global trends and understand what things are going, make sure to subscribe and stay informed. Thank you and have a prosperous day.